Every trader searches for certainty, but Richard Wyckoff taught that the market rarely whispers, except during what I call the litmus test, the one signal that quietly confirms nearly 90% of successful trades. Imagine watching a stock drifting near support, volume drying up like a river in drought. Most traders panic or guess. But a true Wyckoff student waits. And then it happens, a clean secondary test. Price revisits the previous low, spreads narrow, sellers vanish, and volume shrinks to a whisper. That silence is not weakness. It's the market's confession that supply has finally been absorbed. This is the moment Wyckoff himself would lean forward, narrow his eyes, and say, "Now, the path of least resistance is ready to change." It's the quiet signal that separates professionals from amateurs, your litmus test before committing capital. Ladies and gentlemen, today we're stepping into the mind of a master, Richard D. Wyckoff, the man who believed that the market is a living organism and every movement is a message. In trading, we are surrounded by noise, illusions, and emotional traps, yet Wyckoff discovered that beneath that chaos lies a set of silent signals that reveal the true intentions of the composite operator. Among these signals, one stands above the rest. I call it the litmus test, the single Wyckoff confirmation that quietly validates nearly 90% of high-probability trades. It is subtle, often overlooked, yet extraordinarily powerful. When understood, it gives traders something rare: clarity in an environment built on uncertainty. Today, we will unpack this signal, understand how it works, and explore why it is the final checkpoint elite traders rely on before committing capital. Prepare to see the market not as random movements, but as a deliberate story waiting to be read. In Wyckoff methodology, the market is understood as a battlefield between supply and demand, orchestrated by the unseen hands of the composite operator, Lee C.O. Bay. While many traders obsess over patterns and indicators, Wyckoff traders focus on the behavior of price and volume, the market's true language. Among all the subtle signals Wyckoff identified, there is one that acts as a litmus test, the final and most reliable confirmation before entering a trade. This litmus test is the secondary test, the moment when the market revisits a critical level to reveal whether supply has truly been exhausted. It is not merely a retest, it is a psychological and structural examination of the market's foundations. What makes the litmus test so powerful is its ability to filter out false setups. Many traders jump into trades the moment they see a selling climax or buying climax. But Wyckoff warned that these events alone are not enough. Markets are full of traps designed to lure emotional traders. The litmus test, however, exposes the truth. When price returns to a previous low during accumulation, often the selling climax, it does so with narrower spreads, lower volume, and reduced downward pressure. This behavior signals that the composite operator is no longer interested in marking down price. Instead, they are now testing the resolve of remaining sellers. If the market holds at or above the previous low and supply fails to reappear, the test is successful. This is the moment Wyckoff traders wait for. The market's quiet confirmation that a shift in the path of least resistance is underway. The beauty of the litmus test lies in its consistency. Across thousands of charts, asset classes, and timeframes, the secondary test reveals the same truth. The battle between supply and demand has reached equilibrium, and the CO is preparing for the next phase. It acts as a bridge between uncertainty and confidence. A selling climax may catch your attention, but the litmus test convinces you. It's the difference between guessing and reading intention. This signal is not limited to accumulation. In distribution, the same principle applies. After a buying climax, the market drifts back upward to retest resistance levels. But this time, the litmus test shows diminishing demand, spreads narrow, volume dries up, and upward progress stalls. Traders who understand this subtle shift recognize that the composite operator is no longer supporting higher prices. The secondary test becomes a warning bell, signaling the beginning of markdown. What makes the litmus test so powerful, why it confirms nearly 90% of successful Wyckoff trades, is that it eliminates premature entries. It forces patience, discipline, and alignment with the market's true rhythm. Instead of chasing the first sign of reversal, Wyckoff traders wait for the market to prove its intentions. And when it does, the litmus test becomes a green light that aligns trader and composite operator on the same side of the trade. In Wyckoff methodology, few events carry as much weight or reveal as much truth as the secondary test ST. While many traders rush to label any pullback as a retest, the Wyckoff secondary test is far more nuanced. It is the market's way of proving whether a prior climax was genuine or simply an emotional spike. The secondary test is not just a structural checkpoint. It is the moment where price, volume, and intention align to confirm whether the composite operator has absorbed supply or demand. This is why Wyckoff traders often refer to it as the confirmation of all confirmations, the point in the cycle where high-probability trades are born. After a selling climax, SC in accumulation, the market typically rebounds sharply due to panicked short, covering and early buyers entering. But Wyckoff taught that this initial rally means little unless tested. The composite operator, being methodical and precise, must verify that no meaningful supply remains. This verification takes place in the secondary test. Price drifts back toward the SC level, not with violence or panic, but with noticeably reduced volume, narrower spreads, and a lack of downward urgency. These characteristics are not random, they are the fingerprints of supply exhaustion. If the secondary test holds above or at the SC and volume remains muted, it is a clear indication that sellers have lost power. The market is no longer responding to downward pressure, meaning the composite operator has successfully absorbed what was available. This is the moment a Wyckoff trader shifts from observation to anticipation. The market's internal conditions are quietly aligning for the start of Phase C and, eventually, the markup. But the secondary test is more than a price revisit. It is an X-ray of the market's internal health. It reveals whether the prior climax was legitimate or merely temporary. A failed test, for example, often shows increased volume, wide spreads, or a new lower low. This tells the trader that supply remains active and that the market is not yet ready for accumulation. Wyckoff always warned traders, do not confuse action with confirmation. The secondary test is the ultimate separator. The same logic applies in distribution. After a buying climax, a BC, the secondary test retests the resistance zone, but this time the behavior is inverted. Instead of reduced supply, we see weakening demand, rally attempts that lack conviction, shortened spreads, and volume that fails to support higher prices. Just as accumulation's ST confirms strength, distribution's ST confirms weakness. Traders who understand this dynamic can position themselves for the markdown phase before the majority even suspects a shift is coming. The psychological power of the secondary test is profound. It forces discipline over impulse. It prevents traders from entering too early or too late. It provides a tangible, objective checkpoint in a market that often feels ambiguous. Most importantly, it aligns your actions with the composite operator's strategy. When you trade after a confirmed secondary test, you are not predicting. You are participating in a move already validated by the market's largest player. This is why the secondary test confirmation is considered one of the most reliable signals in Wyckoff methodology. It takes uncertainty and transforms it into conviction, giving traders the confidence to act not on hope, but on proven market behavior. In the Wyckoff method, few concepts are as foundational or as misunderstood as supply absorption. To Wyckoff, the market's movements were not random fluctuations but deliberate operations performed by the composite operator COB. whose objective is to accumulate inventory at the lowest possible price before initiating a major markup. The process that makes this possible is absorption, the quiet, systematic removal of supply from the market, which gradually diminishes selling pressure until demand can dominate uncontested. Understanding supply absorption analysis is one of the greatest edges a Wyckoff trader can possess, because it reveals not only what the market is doing, but who is doing it. Absorption begins long before the public recognizes accumulation. After a selling climax, panic selling floods the market, providing the composite operator with an abundance of shares to buy. But Wyckoff taught that this is only the beginning. The CO cannot launch a sustained uptrend simply because the market bounced from oversold conditions. They must first eliminate remaining sellers, weak holders, late shorts, emotional traders, and those anchored to previous price levels. This elimination process unfolds through a series of controlled pullbacks, sideways consolidations, and subtle retests that gradually soak up all available supply. A key to supply absorption analysis lies in the behavior of volume. During the early stages of accumulation, volume may remain elevated as the CO absorbs sellers eagerly unloading their positions. But as the process matures, the signature of absorption becomes unmistakable, declining volume on down moves. Each dip generates less selling pressure than the last. Spreads narrow. Down bars lose significance. Price begins to hold higher levels more consistently. These clues reveal that supply is no longer a threat. The composite operator has accumulated enough inventory and removed enough resistance to prepare for markup. The secondary test, assesstive, is often the most definitive demonstration of absorption in action. If the test returns near the selling climax level with dramatically reduced volume, it shows that the market is no longer responding to downward pushes. Sellers are exhausted, supply has been absorbed. This is why the ST often marks the transition from phase B to phase C in the Wyckoff schematic, the point where absorption ends and preparation for the next major trend begins. But absorption is not only about volume, it is also about price behavior relative to structure. During absorption, down moves become progressively weaker, highs become easier to reclaim, and the trading range begins to tighten. The composite operator tests the market again and again, probing for remaining supply much like a general tests enemy defenses before advancing. When these tests show diminishing resistance, it is evidence that the path of least resistance has shifted upward. A common mistake among retail traders is misinterpreting this quiet phase as stagnation or indecision. Wyckoff, however, saw it as the market's most informative moment. Absorption is where the CO reveals their strategy, not through dramatic moves, but through subtle imbalances between supply and demand. Effective supply absorption analysis allows a trader to distinguish between a real accumulation and a dead cat bounce, between a genuine trend setup and a trap. It transforms noise into meaningful insight and gives traders the confidence to enter trades in harmony with professional activity, not against it. Richard Wyckoff built his entire methodology on a single powerful idea. The market is not a chaotic battlefield. It is an organized campaign led by a sophisticated force he called the Composite Operator (COD). This entity represents the collective actions of institutional investors, large operators, market makers, syndicates, and informed professionals. To Wyckoff, understanding the market meant understanding the intentions of this operator. Everything else, indicators, patterns, predictions, was secondary. The key was deciphering what the composite operator wanted, when they wanted it, and how they executed it. Composite operator intentions is the study of this silent but dominant force. The composite operator does not think or behave like a retail trader. They do not chase breakouts. They do not panic during declines, and they certainly do not reveal their strategy through impulsive, emotional trading. Instead, they plan campaigns, strategic, deliberate, multi-phase operations that unfold slowly, often over weeks or months. Accumulation, markup, distribution, and markdown are not random phases, they are the footprint of the CO's objectives. When traders learn to read these footprints, they stop guessing and start aligning themselves with the only player who truly moves the market. A major part of deciphering the CO's intentions involves recognizing how they manipulate supply and demand. During accumulation, intention is shown through absorption and quiet support, holding price above key lows, buying into weakness and stabilizing the structure. But these actions are subtle, almost invisible to the untrained eye. Retail traders see sideways movement, Wyckoff traders see positioning. When the CO intends to accumulate, their actions reduce volatility, compress spreads, and create a calm equilibrium beneath the surface. The intention is clear: build inventory without revealing motive. As the campaign progresses, the CO transitions from accumulation to preparation for markup. This shift is where intention becomes more visible. Springs, shakeouts, and tests are not random events. They are deliberate tactics used to remove weak holders, trigger stop losses, and ensure that once the trend begins, it begins with minimal resistance. These maneuvers reveal the CO's desire to create the cleanest possible path upward. When price refuses to break back below support after such tests, it signals that the CO is no longer buying. They are preparing to launch. During distribution, intentions invert. The composite operator is no longer supporting price. They are unloading inventory to the late buyers who mistake the trading range for consolidation. Signs of weakness, upthrusts, and failed rallies reflect the CO's intention to move from selling quietly to allowing lower prices to unfold. Volume dries up on rallies and increases on declines, revealing the shift from demand dominance to supply dominance. The intention is unmistakable: prepare for markdown. For a Wyckoff trader, reading the composite operator's intentions is not optional. It is the essence of the method. It transforms the market from a confusing chart of candlesticks into a coherent narrative driven by the world's most informed participants. When you understand intention, you stop fighting the market and start flowing with it. You don't need predictions. You need recognition. The composite operator always leaves a trail, and your job is simply to follow it. In trading, the search for certainty often leads traders into the arms of misleading indicators, emotional impulses, and market noise. But Wyckoff understood something far more powerful. Certainty does not come from prediction. It emerges from validation. High-probability trades are not born from gut feelings or guesses. They form when the market completes a sequence of objective behaviors that confirm the intentions of the composite operator. This process, known as high-probability trade validation, stands at the core of Wyckoff's methodology and serves as the final filter before a true professional enters a position. Validation begins with structure. A trader must first identify whether the market is in accumulation, distribution, markup, or markdown. But recognizing the phase alone does not justify participation. The strength of Wyckoff's method lies in the requirement for multiple convergent signals, each reinforcing the other. A selling climax may appear dramatic, but Wyckoff warned that it is merely the first sign, not an invitation to enter. High-probability validation requires seeing the market pass through a natural sequence: preliminary support or supply, climax, automatic reaction, and finally the secondary test. Without this structural consistency, a trade lacks foundation. The secondary test is often the centerpiece of trade validation because it exposes whether supply or demand has truly exhausted. In accumulation, an ST with low volume and higher lows confirms that sellers no longer possess the power to drive price lower. In distribution, the same event reveals weakening demand. This test works like a truth detector, stripping away the illusion of randomness and presenting a clear message. The composite operator is ready for the next phase. It is this clarity, rooted not in speculation, but in observed market behavior, that forms the backbone of a high-probability trade. Volume analysis further enhances validation. Wyckoff traders pay close attention to how volume behaves at critical junctures. A valid bullish setup requires decreasing volume on down bars and increasing volume on rallies. A valid bearish setup requires the opposite. This interplay between effort volume and result price reveals the underlying power dynamics between supply and demand. When effort and result harmonize in favor of the intended direction, the trade gains credibility. When they diverge, the setup must be ignored. Another component of high-probability validation is behavioral confirmation, how price reacts around key levels. Springs, shakeouts, upthrusts, last points of support LPS and last points of supplies LPSY are not signals to jump in blindly. Instead, they are tests designed to confirm strength or weakness. A spring alone is not enough. The test of the spring is the true validation. An upthrust is not a sell signal. The failure to reclaim the upthrust level is the validation. Wyckoff repeatedly emphasized, the market must prove itself. Context also matters. A high-probability trade aligns not only with structure and volume, but also with the broader market environment. Is the index supporting the trend? Is the asset acting stronger or weaker than its peers? These elements add another layer of validation and increase the likelihood of a sustained move. Ultimately, high-probability trade validation is the culmination of Wyckoff's most important principle: don't anticipate, confirm. Traders who rely on validation enter fewer trades, but the trades they do take carry significantly higher conviction, cleaner structure, and better risk-reward ratios. They trade in harmony with the composite operator, not in conflict. And that alignment is what separates a professional campaign from a hopeful attempt. In closing, remember this: the market is not a mystery, it is a message. Richard Wyckoff devoted his life to decoding that message, and today we have revisited the very principles that allow traders to navigate uncertainty with confidence and precision. The litmus test, the secondary test. The process of supply absorption, the reading of composite operator intentions, and the discipline of high-probability trade validation are not isolated ideas. They are parts of a single, coherent framework that reveals the hidden structure behind every major trend. When you learn to identify the litmus test, you stop guessing and start recognizing. When you understand the secondary test, you stop reacting emotionally and begin observing objectively. When you analyze supply absorption, you uncover the market's internal health long before the crowd sees it. When you decode the composite operator's intentions, you stop trading against the strongest force in the market and start aligning with it. And when you demand high-probability validation, you transform from a hopeful trader into a deliberate, disciplined strategist. Wyckoff didn't just teach a method. He taught a mindset. He taught us to slow down, to observe, to question, and to trust only what the market proves, not what we wish for. He taught that the strongest trades are not found in noise, hype, or prediction. They emerge quietly, through confirmation. So as you move forward in your trading journey, let this be your compass. Wait for the market to reveal its intention. Let the litmus test guide you. Let confirmation replace emotion. Let the composite operator lead the way. Do that consistently, and you will begin to experience what Wyckoff understood all along: profitable trading isn't about being right. It's about reading correctly.